Hello everyone. Welcome and thank you for joining our webinar today. I'm Kushbu from iTime Equity and we are happy to have you with us today. Before we start with the webinar, I would like to take this opportunity to introduce you to MyTime Equity and Sudhir Pai. As an actively managed portfolio management and RIA firm, MyTime Equity takes pride in being your dedicated partner on this financial adventure. Sudhir Pai is a founding principal and serves as a fiduciary investment advisor representative for the firm. Before I hand over to Sudhir, let me take you through the disclosure slides that our attorneys mandate that we show prior to every webinar. If you have any questions during the webinar, please type them into the question box and we will address them during the Q&A session. If you need Sudhir's help, please write to us at wealth@mytimeequity.com or you can call us at 972-330-2771. Over to you, Sudhir.
Thank you very much, Kushbu. Thank you. And thanks to all the listeners and viewers who have joined us on this Saturday morning. So we will start with the market update. Uh, the market was a little bit bearish, over the last 3 days, 3 working days. Wednesday, we saw a all-time high, and then, certain things made the market get into the reddish side. What was that, right? So, the results from Walmart, the earnings report from Walmart was okay. It was not bad, but they also gave not such great guidance for the future for 2020, say 5 and 2026, and that was primarily because they are concerned about the tariffs on Mexico and Canada, and that's where Walmart took a big dip, but then by end of the day, it came back up. So investors who are really wanting to get back in the market, they are buying the dip. So buying the dip is continuously going on, as we can see on the chart. This is a daily chart. We see the red candle, and that was pretty long and it was pretty bad. That's why we saw a major sell-off on Friday, and that touched the 50-day moving average. That doesn't mean that we are bearish about the market. The trend is intact, but there are more bears than the bulls in the market, and that is where every bit of news will send certain signal to the traders, and they get out of the market, or they start shorting the market. But then when the dip buying happens, the ones that have shorted this dull market are going to get into trouble. So for long-term investors, I don't see any need for panic. We are in the market. All our portfolios are 100% invested. Our margin portfolio, which is one of our portfolios, which we'll show in the next slide, is at 105%. And we intend to take that to about 135 or 140%, because we are waiting for a further dip in the market of another 2 to 3%, and if that happens, we are going to get in all in for those margin clients who are willing to take more risk. So investors are buying the dip. So long-term trend is good. Do not worry about the short-term red candles. Everyday news is going to bring certain redness in the market, but that's very temporary. And on the crypto side, the markets did pretty well. But on Friday, there was this news about, Bybit, $1.5 billion Ethereum hack that took place. And that sent, a negative signal to the market, and there was sell-off. So while we are very positive about the crypto market for 26, we are very positive about Bitcoin, particularly for 2025 and 26. We are being prudent, not putting a lot more money than what allocation we have in our portfolios. So we have about 3 to 5% in crypto in our portfolios, in the metals and crypto portfolio, and we are very comfortable with it. So at this point, everything is okay. Do not worry. Till you sell your equity positions, you have not incurred a loss. Day-to-day movement doesn't panic us. We see it as an opportunity to buy the day. Okay, so that's about the week ending 21st February 2025. Going to the next slide. Kushbu, next slide, please. Okay. So this is our portfolios. You can see that S&P 500 year to date is 2.36, and then month to date is negative 31 basis points, and then week to date we saw 1.6% downside after, and this is all after S&P hit all-time highs on Wednesday. And the Nasdaq took a bigger beating, and then Russell 2000, or the small cap index, took a even bigger beating. Gold was green and Bitcoin was red, and then the bond index was slightly positive. If you look at our major models where most of our clients are in, they are in the custom models, and all our custom models, the big ones, the IBKR custom, Schwab, and Margin, are all green and much better than S&P 500. And these numbers were very, very green. Last week and the week before that, we were around 7 to 10%. On the margin model, we were close to 9%. 3 weeks ago, and the other models we were almost 8%. So these ups and downs are very normal in the market. We don't panic looking at day-to-day numbers or weekly numbers, because we are here for the long run. Next slide. But one other thing that I want to also get your attention to is the China model. Our China model has beaten all other China models in the world. I think, our individual stock picks that we have done for China is doing extremely well. And also our international model under the ETF models, is also doing very well. That's not here, but if you go to the website, you can see the international model performing very well. So what it means is the international markets are doing pretty good, because here in the US, last 2 years was a gangbuster game. But this year, we don't believe S&P is going to deliver the best result. So money has to move between multiple sectors and multiple indexes. So we are still believers of small and mid cap doing well, gold doing well, metals and crypto doing well, and international markets and all the innovative companies, which is part of the next generation model, doing very well for 2025. Next slide. So let me take you through some of our structured notes. We talked about Coinbase last week as well. This is open still because February 28th is the trade date for Coinbase. Coinbase announced good earnings. The SEC has withdrawn the complaint, and so Coinbase has come out clean from that lawsuit. So Coinbase really did very well till Thursday, and because of the little bit of sell-off on Friday, it saw some redness there. But overall, very positive about Coinbase. This note is specifically for those who believe in Coinbase as a exchange, as an alert, and all the innovation that they are bringing, in the crypto market and the digital space. So this particular note is for those who want to be in Coinbase and who like the returns of Coinbase over the long term, bullish about Coinbase because the management is solid, pioneers in the digital asset space. So this note has a 50% downside protection. So the value as on February 28th, whatever value we finally lock in, so 50% of that price, we are covered. And we have a term of 3 years. That means, for 3 years, whatever noise happens in between, we are really not bothered with it. So this note takes into consideration the price on February 2028, and the price at the end of 1 year, and the price at the end of third year. So at the end of third year, we have a 50% protection. At the end of 1 year, if this note, if Coinbase is flat or positive, we end up getting 37.5%. So it's a very healthy return. It's very hard to get 37.57 percent for as 1 year's return. So we can get 37.5% as long as Coinbase is not negative as of 1 year from now, on that date. Whatever happens in between doesn't bother us, right? And if it is not positive, it goes to year 3. And at the end of year 3, if Coinbase is positive, we get 2 times the returns. So if Coinbase is up by 100%, in 3 years, you get 200%. If it's up by 200%, you get 400%. So you get 2x of the actual returns at the end of third year. And if it is down, let's say worst case situation, if Coinbase is down at the end of 3 years, based on today's price, February 28th price, then up to 50% there is no loss, you get your money back. But if it is below 50%, which is going to be extremely bad situation for Coinbase or for the equity markets, that is when you end up losing money 1:1. So that's the Coinbase note, and this is issued by BNP Paribas, and it's a 3-year note. and the minimums are mentioned on the flyers. And it's also on our website. If you visit mytimeequity.com/structured notes, you can see all our current, past, and matured structured notes there. Next slide, Kushbu. Okay, so we have three things to cover. We have this one other note, which is on Palantir, Apple, and Google, all very three strong companies. The trade date on this is also February 28th, so we have time, and another 8 days, 6 days to go. And all three good companies, two Mega 7 and all three S&P 500. Palantir announced great results because of the AI, because of everything that they have to do with the government. The company is doing extremely well. It saw a little bit of pullback over the last 2 days, which is good. The more it drops by February 28th, it is good because we are buying stock which is already low. Apple is already low, Google is already low, so that's good. On February 28th, if the price is good, we lock it, and after that, what happens is good for us. If the market keeps going up, stocks keeps going up, we keep getting 2.4%. So this is an income note. This is not a growth note. The Coinbase note was a growth note. This is more of an income note. So every month you get 2.4% or yearly 28.9%. All three good companies. As long as these three stocks don't fall below 40%, you keep getting your 2.48%, 40% every month. And the bank can return the money at the end of sixth month. So if the bank feels that if the bank sees that all the three stocks are positive, there is no bank taking a decision by themselves. This is an auto call note, which means the bank will automatically, the software will automatically return the money at the end of sixth month if all of these three stocks are positive. So what can happen if all the three stocks are doing well, because we are bullish about the market? At the end of sixth month, you may get your money back, and that's the time when we have to decide where to put that money again. And you keep listening to our webinars. We keep bringing one or two notes every month. So there is no shortage of opportunities the way we are working. So you don't have to worry about what happens if the bank returns the money. And on the other side, if bank doesn't return the money because one of these three stocks are lower than the February 28th price, then it goes all the way up to 5 years. And you keep getting your 2.4% as long as these three stocks don't dip below 40% of the February 28th price. And at the end of fifth year, if the stocks have not fallen below 40%, you get your money back. And if it has fallen below 40%, that's when you get impacted. So that's about this particular note. And these flyers are posted in our WhatsApp group. If you are not part of the WhatsApp group, please sign up for that. You can send an email to wealth@mytimeequity.com with your cell phone number or WhatsApp number, and we can add you there. So all of these opportunities we post, and we post the recording of the webinars and market open information, market close information. So about 3 messages per day is what we post. So if you're really interested in knowing what's happening in the world with stocks and bonds, you should be part of that group. Next slide, Kushbu. So this is one other income note. This is ending on March 14th. So there is plenty of time for this. So this is on AMD, which is a semiconductor company, Palantir, and Micron, which is again a semiconductor company. So we have three companies here. It's a 3-year term issued by Barclays Bank, and it's a 6-month note. And this has something called as memory, which means if for any reason, if the market for these three stocks are down by more than 50%, then you end up not getting paid that interest for that month. Right here, the interest is 1,875 on a $100,000 investment, which means it is 1.8% per month or 22.5% per year. So if you make an investment in this, every month you keep getting paid 1.875%. And if there is a drop of more than 50% in any one of these three stocks, that is when you don't get paid. But when the stock comes back in price, you get not only paid for that month but all the previous months as well. And this is not a growth note, so when they return the money at the end of sixth month or at the end of 3 years, you don't get any extra growth. All you get is income for the month and return of cash at the end of sixth month or at the end of fifth year, third year. And this is issued by Barclays Bank. And here also, we open a Charles Schwab account. The minimums are mentioned on the flyer. It's 25,000 for existing clients and 50,000 for new customers. Charles Schwab account, and we charge our regular money management fee, for managing all your accounts, including bringing all the structured note and things like that. Okay, next note, Kushbu. Okay, so this is one of our very creative ideas, which we have launched, and we are going to have this kind of a note continuously. And the way this works, what is exactly this particular ticker? We understand Apple, Microsoft, Palantir, Google, but what is this SPXFD356? This looks like some kind of a, password or a code. But what it means is this is S&P 500 futures index. So if you go to Google and put that, number or code, you will find out that that's an index which is on Bloomberg, and this is an index which is a little bit of adjusted index to S&P 500. So there is S&P 500, which we all know, which is the market. Then there is S&P futures, which means it looks at the future value. It gets traded 24 bar 7. So this particular index is used by a lot of traders to get higher returns because they are constantly in the market trading, or going long or short, or doing swing trading and scalp trading and all of that. This is an index which traders use. So just keep that in mind. S&P 500 futures index. And now this particular index is created with a 35% volatility. Now S&P 500 regular index has a 20% volatility. This one has 35% volatility, and the 6% of dividend that comes from S&P futures also goes back in this particular index. So in short, this is a little bit of education required here, but it's a great note for those who want certain return continuously, without having to think about individual stocks, right? Because this is the entire market. This is all the 500 companies of S&P 500. If those who are thinking S&P 500 index like SPY or VOO gives you the best return, this is going to get you even better return. Kushbu, go to the others next slide, the table slide. Okay, so here are the historical and hypothetical returns, monthly returns of this particular index. Now, the reason why I say hypothetical is because some of the years like 2006 to 2020, I think, are all back-tested numbers. These are not real numbers, but they use a back-tested model to find out what would have happened if this index existed, so behind since 2006. So if we look at the monthly returns and just focus on the yearly column, for 2006, while S&P generated 13.62%, this index generated 16.79%. The second year, if you see, S&P was positive 3.53, and this was negative 16.71. 2008, which is the great financial crisis, the banking crisis that took place, S&P was down 38, and this was down 54. So you can see that this gives you the higher returns and higher losses. The next one, is 23 S&P in 26, but if you focus on 2013, this gave 87% return and S&P gave 29% return. Now let's focus on the last 3 years, 22, which was the bad year, and 23, 24, 25, which are good years. So 42 was negative in 2022, and S&P was 19% negative, which was pretty bad, right? This index really took a big hit. But if you look at 23, it was about 9% more. If you look at 24, it was about 2% more. And 25, so far it's 3.69%, and S&P is 2.7%. So what does this mean to you? When you look at this table, this tells you that I like this futures index, but how do I get protected? When the market falls, particularly if you look at 2008 and 2022, when market took a dip of 38% and 19%, this went up to 54% and 42%. So if you look at our note, come back to the other slide. Yeah, so if you look at our note, we have a coverage. If you see the box at on the first flyer, it has a downside protection of 50%, which means if this note goes down up to 50%, we don't care. If this index goes down Up to 50% we don't care. And this is a 3-year note. This is not a 1-year note. This is a 5-year note. And this note, gives you 25% return every year, as long as this particular index has not gone down. So if it is flat or positive as of 21st March, so we take the price of this futures note, like we take the price of Apple note or Palantir note, as of 21st March, and that price, if it has not gone below at the end of 1 year, you get 25%. It has to remain above the purchase price. Then you get 25%. If it goes to second year, because the first year was not positive, then it goes to second year, then you get 50%. So you get 25 into 2. If it is not positive in year 2, it goes to third year, fourth year, fifth year. So every year it snowballs. It basically doubles up, right? 25 becomes 50, 50 becomes 75, 75 becomes 100. And so per year you are getting 25% return, as long as this index has not fallen below March 21st rate. Okay. And what if the market is even better? Let's say at the end of 1 year, we are getting 25%, but let's say this particular index has gone up by 50%. Now, good thing about this note, which is the best part of this note, is if the actual returns are more than 25%, then we get that. So if you focus your attention on the left side of the slide, and if it says maximum return, you get 25% return or the actual growth of this return uncapped. So if this index performs very well at the end of 1 year, second year, third year, fourth year, fifth year, you get that return. If not, you get 25% return. Now, what happens if you go all the way to the fifth year, because this particular futures index has remained down for all the 5 years from the March 21st date, and it goes all the way up to fifth year? Then what happens? Up to 50% you're protected, and below 50% is when you really get affected. So there are a lot of risk mitigants, and we are using this particular ticker, or a particular futures index, to get higher return than the S&P 500. Right? If you are able to get 25% return per year without really going through the headache of seeing what is going on with the market, we have a 50% downside protection. To me, this is a good night's sleep, right? So, this index, this type of note, I think we will have it all the time. For those who want to invest in this, every month, you can ladder up. Let's say you have $1 million to invest, and if you want to put 100,000 every month, so that way you are capturing the price of this particular index of every month, right? So you are kind of dollar cost averaging, and you are getting the benefit of dollar cost averaging and laddering this particular indexed futures index, which can give you a very, very high return, but can also make you lose a lot of money. If you directly want to invest in this index, you can, but then there is no protection on the downside, right? But if you invest in this note, you not only have protection, you have the full return, then you have a minimum of 25 if it doesn't go up. So this note, I think, is the best of all, in my personal opinion. I am putting a lot of money in this because this gives me peace of mind. I can sleep well at night, and this is from BNP Paribas, one of the strongest banks, and it also snowballs year on year, 25, 50, 75, 100, 25. So this note is, in my opinion, is a good note. It covers the entire market and gives us multiple types of returns, and covers us on the downside at 50%. So these are the three notes we wanted to quickly share, and that finishes my today's presentation. So if you have any questions, please type it in the questions box, and I'll be more than happy to answer about 5 of the questions, because I have to get into an event in some time. But I'll be more than happy to answer your unanswered questions, all your questions which are unanswered, via email, or we can call you and answer them. But do keep posting your messages in the questions box, and I'll be more than happy to answer them. So the first question I've got is, what is in it for Charles Schwab or any note provider? Great question. Charles Schwab is purely a custodian. So we basically use Schwab because we have a contract with Schwab for no fees. So you don't pay any monthly fees or annual fees. We charge you a annual fee anywhere between 2% to 1%, depending on the amount we are managing. More the merrier. So we charge less if the value of the account is bigger. So if it is more than $1 million, our fee is 1%. That's fixed. So what is in it for Schwab? Schwab is a business of custodianship, so that's what they do. They provide us service and they make money from the stocks that they are trading. They use the data. This is what this same question applies for Robinhood. Same question applies for Webull or Fidelity. If you have accounts with them, the question is what do they make if they are managing your money? If they hold your money, what is that they are making? That question should easily be answered when you look at your other accounts. Now, what does the note provider make? The note provider is the bank in this case, BNP or one of the banks. The banks are in the business of lending. What they do, they basically create these kind of products by using calls and puts and straddles and leaps, and they make it easy for someone like us who are not that sophisticated or don't want to put this kind of time on creating these kind of notes or managing these kind of notes. So they are offering you a simple straightforward solution. It's like buying an insurance product, right? You can buy your own, you can be self-insured, you don't have to take an insurance policy, or you can work with an insurance company because they have a pool of people, they know how to run these nodes, and they have the systems, technology, and all of that to come up with this kind of a structure. So that is what the business is of, that is the business the bank is in. They will basically take your money, give you this kind of a contract saying this is how much you make, this is how much you can lose, and all that. And they use that money for their balance sheet to lend and make investments. Can you comment on the note with Tesla, which closed on, uh, which closed on December 26th, 2024? Tesla shares appear not to be doing well and depends on Musk. So yeah, so Tesla has got huge volatility. If you look at the chart of Tesla, it does very well when it is doing well. It falls bad when it falls bad, right? But we all believe in Musk, and we believe in Musk even now more because he is part of the government and all that. I don't want to get into a political discussion. Musk has been doing a great job. His track record is pretty good, so that is why we believe in Musk. Trump also believes in Musk. Most of the people believe in Musk, and Tesla is a share which has been doing very well from the last since inauguration. So we continue to believe in Tesla because they have the technology and they have the revenue requirement of Tesla also, is also can be coming from other Musk companies, such as there is XAI that is launched. Then there is SpaceX and Boring Company, and many other companies that Musk runs. So we can get into a discussion about why Tesla, should we keep Tesla as part of the note and things like that. But if we use a volatile instrument like Tesla, Nvidia, Palantir, Micron, Apple, Google, all of these tickers have a lot of trading going on. That is where volatility exists. When I say volatility, what it means is people are just buying, selling. That creates, the chart to go up and down. That volatility is what makes these kind of instruments offer you a much higher return. And we need these volatile products if you want to get a higher return. Now, if you don't want volatility, if you don't want Musk, if you don't want Tesla, then we have the S&P futures index and other indexes that we are using, and we can also create a custom note for you. Like I created a custom note on a Chinese ETF called KWEB, for a few of our clients, about 3 months ago. And that has worked out very well because China is doing well, and Chinese technology companies, particularly after DeepSeek, has been doing extremely well. So if you are personally interested in me creating a note for you, like if you believe in some companies, if you believe in some index, Poland is doing extremely well. So if you want me to create a note on the Poland index or European index or a basket of indexes, I can do a lot of things. So come to me with the need, come to me with the need for more than 250 to $500,000, because if I have to create a note for you personally, specifically on individual stocks, I have to create it on at least 500K is what I need to put in. If it is on index, I can do it for 250K or 350K. Talk to us if there is any specific need, and more than happy to help. So with the income, the next question is with income note, if only one of the three stocks are down, would my principal be reduced? No. So if one, that's a great question. So if you have the income note with three stocks, if one of the stock is down that month, you don't get paid at all. Once that stock comes back up along with the other two stocks, that is when you get paid the interest. The node that has memory will get you all the unpaid months. The one that does not have memory will not get you paid for the last month. So there is some decision making on your side. If you have further questions, call us. One of us, either Kushbu or Tejaswini or Anup or Sharath or Shiva or one of our people can explain you this in detail, and then you can decide, whether you want to invest on this or wait for the next one. How can we invest monthly? So yeah, you can invest monthly. We have a systematic investment program as well. So if you want to invest 2,000 per month, 3,000 per month, 5,000 per month, you will have to keep sending that money into Schwab, and we can keep buying notes. And if you like this futures index and that's what you want to do every month, we can keep putting money into that every month as well. And by the way, we also have a lot other ideas, not just these three ideas that I'm sharing it here. We have multiple private credit funds, like we have funds with Blackstone, which generates about 9% return paid on a monthly basis. Then we have Jefferies, which generates about 12 to 13% interest, which again paid on a monthly basis. We have TPG Twinbrook, Angelo Gordon Twinbrook, that generates about 12 to 13% income. So we have also have Veritas, which is an infrastructure fund, which has a growth plan of about 22 to 28% per year. So there are a lot of very, very high quality funds that we can bring to you if you are interested. Some of them are non-accredited products. Some of them are sophisticated for only for qualified clients, which means your net worth has to be more than $2 million, or qualified persons, which means your net worth has to be more than $5 million. So there are a lot of different ideas which we can talk to you about. We can also talk about estate planning, because the Tax Cuts and Jobs Act is not yet renewed. So we expect that to be renewed very soon, at least before the end of this year. So they are now working on fiscal deficit, fiscal budgets. So if they are able to showcase that they can bring in a lot of money by bringing in this governmental efficiency, then I think the expired act is going to be renewed, and we should be able to see all the benefits that we enjoyed over the last 5 years to come back. And there is a possibility that it can be permanent, not just temporary tax cut. Along with that is also estate tax, right? So if you have a net worth of more than $13 million per person, so in a family of two, husband and wife, you have 26, $27 million exemption. So how do you plan that? Do you create an irrevocable trust? Do you create a charitable trust? So there are a lot of ways we can help you save your not only income tax but also estate tax, structure your entire assets, and give you a good financial plan. So you talk to our team, and we should be able to help you with all of that. And with that said, I'll be signing off, folks. If you have any further questions, please send it via email. Happy to talk to you and explain some of these complex investment ideas in detail. The structured note needs a discussion. So please call us or send an email, wealth@mytimeequity.com, and we'll be able to answer all your questions. With that said, thank you very much. Have a good weekend. Thank you. Take care. Bye bye. Bye, Kushbu.
Excellent. Thank you so much.